going to be doing a walkthrough of the accounting prelim exam for September 2014. It's the one you just wrote. So when the exam starts, just a little bit of exam technique. You write as quickly as you can in a blue pen your name. You put the date, which was 22nd of September, and you fill in your ID number there. Okay, then you just read the breakdown. The answer book consists of 20 pages, including the cover page. You go to your question paper, and you will see that there's 16 pages in the question paper and a cover page. So you read the instructions, and you should have a breakdown of the questions on one of the first few pages, and this is where you can orientate yourself and kind of come up with an action plan. Right, so you see you've got your stock valuation, VAT, reconciliations, manufacturing concerns, companies, cash flow analysis, budgeting and fixed assets. Right, so you will know which areas you are most comfortable with. Okay, so that's where you will start. Then another important thing is your time. You've got the marks here, 35, 25, etc. For every 1 mark, you've got 0.6 minutes. Right, in total there's 300 marks, and you've got 180 minutes. So for 1 mark, you've got less than 1 minute. You've got 0.6 minutes. So to find out how much time you have for each question, it may be indicated, it may not be. If it's not indicated, all you do is you take the marks, you multiply by 0.6, and you'll get the minutes that you need. So I just want to show you that. Right, so if we say 35 marks times 0.6, 21 minutes, and stick to your time. Okay, very important that you stick to your time. Alright, so Karabo, this is pretty much an, please stop me if I'm going too fast. This is for you to understand. Alright, we'll upload this for the other people as well, but this is primarily so that you get an understanding of everything. So let's start with question 1. Stock valuation and internal controls. We read our required briefly. Calculate the closing stock balance, alright, on 28 February 2014 using the FIFO method of stock valuation. Then that's for 7 marks. Always check the mark allocation so that you know how much time you should be spending on a question. Then the cost of sales of compilations, alright, compilations sold, so we know already that these guys are selling compilations. Then we've got the total number of units sold, we've got the total sales amount and the gross profit, and we can see that the first two is for the most marks. Okay, and then we've got some theory questions here. Is the FIFO method appropriate? Explain. Which stock valuation method would you recommend? Okay, the method to recommend and why, right? And then discuss whether W. Kirstein should continue to use the perpetual inventory system or whether the periodic system should be implemented. Okay, then we've got additional information here, but now we can read our question. You are provided with information from the books of Jazzworks music distributors, and all the time we're keeping track of our time spent. Okay, the business is owned by W. Kirstein. Jazzworks music distributors buys and sells a variety of top-end jazz music compilations. So there's the CDs that they buy and sell, and they sell them to customers. The financial year ended on 28 February. Always important to note the financial year. Right, so now they're asking us for the closing stock balance on 28 February. Then we can go to our additional information here. And let me just show you the answer book for this question. just go there. Closing stock balance on 28 February using the FIFO method of stock valuation. So there's not a lot of space here, and you can always request additional answer book or additional paper if you want to show calculations. Alright, so always feel free to do that. What I'm going to do is I'm just going to insert a sheet here, and I would actually recommend that you ask for additional paper right from the start. Yes, just ask for additional paper. Okay, let's go back. Alright, so here we go. This is the information that we have. We've got the stock balance on 1 March 2013. So my financial year runs from 1 March till 28 Feb. Yes, so there we go. And you don't have to draw the timeline if you understand what the figures that they're giving you, but it always helps to see the picture. Right, so this is the opening stock. Just write the opening stock. Right, then we've got total purchases. Right, so there we've got our total purchases, and here's a breakdown of our purchases during the various months. We've got our units, the price, and the total cost. Okay, and then lastly we've got our stock balance on 28 February 2014. So that's our closing stock. Alright, so now our question says we need to calculate the closing stock balance on 28 February 2014. So what does the FIFO method say? First in, first out. So of all the units listed here, which ones are going to be sold first? Yes, the March 2013. These ones here will be sold first. Okay, and then we'll be left with the ones that was purchased right at the end. Okay, now we know that at the end there is 94 units that are left. Okay, and we know we purchased 83, and we know we had 83 in the opening balance, and in total we purchased 347. Let's just read the additional information to see if there's anything else that we need to know. At this stage, what don't we see here in terms of stock movements? If you think of CDs for Jazzworks, they're buying and selling stock. What don't we see in this breakdown? We've got the opening balance, we've got the purchases, and we've got the stock at the end. But we don't see the sales. We don't know how many they sold. Okay, and that's actually one of the questions, which makes sense because it's not given. So they're going to ask us for the cost of sales and the total number of units sold. So that's going to be something we have to calculate. Okay, let me just remind you quickly, how do we calculate units sold? If you've got the opening stock and you've got the purchases and you've got the closing stock, how will you know how many units was sold? Which ones do you need to add? Add the opening stock plus purchases minus the closing stock. Okay, good. So that's going to give you the units sold. Right. But let's get back to our question here. Calculate the closing stock balance on 28 February using the first in, first out method. Right, so this is how we do this. We know that there was 83 units at the start. Okay, we know we purchased 347 during the period, and we know we had 94 units left at the end. So because it's the FIFO, which units are going to be disappearing first? These ones. Alright, so we'll be left at the end of the day with the 94 units. So where do you think the 94 units are going to come from? November and January. Exactly. Well, let's just have a look quickly here. Let's just make sure that we don't miss any information. JazzWorks uses the perpetual inventory system. Okay, we already know that. And they uses the FIFO. We already know that as well. Transport cost amounts to 2 Rand per unit. Why is that relevant? If it's a perpetual system and they give you a transport cost, that needs to be part of the trading stock figure. Okay. And then they tell us here, the opening balance includes the transport costs, which is correct. Because it's a perpetual system, it needs to be included, and it is already included, so we know that's correct. Then we've got 15 units from the May 2013 purchases, so that's here. 15 units of those were damaged and had to be scrapped. This transaction was not recorded. Okay. So that means we're going to have to record that. Okay, so in this information, that's not in there. Note that these goods were not covered by insurance. Then they give us the selling price is 100 Rand. And then 300 units from the opening balance were sold at 40% below the normal selling price at a local charity event. Okay, so now we've read through the whole question. So nothing in this information is going to affect our closing stock calculation. Right, so we can go and we need to first take 62 units, right, from the latest inventory purchased. Right, if we take this 62 units here, how many units do we need to take from the November purchases? Because we're looking to get the value of 94 units. We've already taken 62. How many do we need to take from November? 32, exactly. So that's what we're going to do. Keep going to that answer here. So we're going to take 62, and the value of those 62 units is 60 Rand per unit. Okay? And that is going to give you, if you use your calculator, 62 times 60, 3720. Correct? Alright. Then, now we've taken that, but we need to get to 94 units to get to our closing stock figure. Alright. So we're going to have to take from this batch of 52 units, but we can't take all of the 52 because there was only 94 units left at the end. Alright, so we're going to take 52, right? But we're not going to take, we're not going to take 52. We're going to take 94 minus 62 of the 52. And what was the price of the 52? That batch was 55 Rand. And that's going to give us 1760. Right, then we add this together and we're going to get 0845. And that is the closing stock balance on 28th February. The question there was just why did we take the 94 units from November and January? The reason for that is because we're using the first in first out method. So the goods that came in first will leave first. So all of these goods would already have left, and the 94 units left at the end will come from the latest batches purchased, which is January and November. So that's why we took the closing stock from the two latest batches purchased. Okay, and we first took the latest one, which was 62, but that wasn't enough to get us to the 94, so we had to take the remaining 32 from the batch of 52 units, and then you obviously use those cost prices. Okay, so let's go to the next question. So that's the first one done. Cost of sales of compilation sold. Right, so how on earth are we going to get the cost of sales from compilation sold? we've got the opening stock here, we've got the purchases, we've got the closing stock, and we know how many units are in each of those. We know what was the unit price, all right? We know the purchases had different batches at different prices, okay? So when we're calculating the cost of sales, we're going to have to use the correct cost price. And then we do know that there's one transaction that was not yet recorded, and that was the damaged goods. Okay, so we know this. We know we had opening stock of 83 units. We purchased 347 units. We know our closing stock was 94 units. But we know there was also damaged inventory that we never recorded. Okay. And what is the damaged inventory going to do to your cost of sales? It's actually going to reduce the cost of sales. But let's ignore the damaged inventory for now and see what we would have, what answer we would have got, and then we'll take it from there. So if we take just our opening stock 83 plus the 347 minus the 94, we're going to get 83 plus 347 minus 94. We get units sold of 336. But not all of these units were actually sold. Why do we know that? Because the information says that 15 units were damaged. Okay. So even though we started with 83, if you can imagine, let's say this represents 83 CDs. Alright, there they are. And we then purchased another 347 CDs. Right. Then we know we took out a batch of CDs from sales, and then we end up with 94. Okay. This batch that we took out, we've now calculated that to be 336. But the reason that we left with 94 is not just because we've taken out 336 from sales, it's also because part of this was damaged. So we've got part that was sold and part that was damaged. Okay, so the sales we're going to calculate now. We know the damaged goods is 15. Right, so our sales figure is going to be 336 minus 15, because we know in total we took out 336, and that is the sold and the damaged goods. Total was 336. So to get to the sold part, we're just going to minus 15, and that is then going to give us 321. Happy with that? Okay, so most of you would have gotten to the 336, or should be able to get to the 336. Then all you needed to know was that the reason why our inventory dropped to 94 units was not just because of sales, but also because some of the goods were damaged. Okay, because trading stock can increase and it can decrease. Increase if you purchase, decrease if you sell, or if some of the goods are damaged. Okay, or returned, or here if you get stock that is returned from customers. But in our example, we just had these three transactions. Excellent. Right, so the second question asked us to calculate the cost of sales of compilations sold. And the trick here is to know that we're using the first in, first out method. So of all the batches that came in, the ones that came in first are going to be sold first. Sorry, this wasn't a batch, right? So the 83 units will probably be sold first, then the 135, then the 98, etc. We do also, however, know that of this 135 units that was purchased in May, 15 of these units were damaged and had to be scrapped. So 15 of these units would not be sold because it's been scrapped. So we would never have sold those. So when we do our sales, we've already calculated the total units sold. Right here, we've calculated that the units sold is 321, and that was actually the next question. And so we can quickly fill that in. Our total number of units sold was the 83 opening stock, alright, plus the 347 purchases. Oh, sorry, I'm filling it in the wrong place. 83 opening stock plus 347 purchases minus the 94 closing stock that we had, and also minus the 15 units that was damaged, and that gave us units sold of 321. Now we need to figure out which batches does that 321 units sold going to come from. Okay, so we need to figure that out. So we're going to start with the first batch that came in. The first batch that came in will be the first batch that was sold. So we know that 83 units would be sold, and the cost of those units was 65. So we can start, we can say 83 units was sold at a cost price of 65, and that is going to give me, let me just take a calculator here, 83 times 65, 5395. Right, so of the 321 units that we sold, right, 83 of them came from the opening stock. Okay. Then the next batch of units that would have been sold, because we're using the first in, first out, is going to come from the next batch that was purchased, which was the May purchases. But because 15 of these units were damaged, we can't sell them. So we're not going to take the full 135, we're going to take 135 minus 15 from the May batch. So that's going to give us 135 minus 15, and the cost price of those units were 72. Okay, so if we calculate that, we've got 135 minus 15 gives us 120 times 72. That gives me 8640. Right? Then, what's the next batch of units that's going to be sold? The 98. Right. What was the cost price of the 98 units? It was 62. So if we calculate that, 98 times 62, 6076. Now we need to keep track of how many. We know we've sold a total of 321 units. So we're trying to calculate the cost of sales for this 321 units. We've already added the cost of sales of 83 units, plus another 120, plus another 98. So at this stage, if you add these up together, you're going to get 83 plus 120 plus 98. So we've calculated the cost of sales of 301 units, but we need the cost of sales of the full 321. So we still need to sell 20 units. Okay. So what's the cost price for these last 20 units? Okay, so we've sold these ones, we've sold these ones, we've sold these ones. So the next batch that the sales are going to come from, because we're using first in, first out, is going to be this batch where the cost price is 55. Yes, because that was still on hand, and that makes sense now. Carol was just saying that from the 55, the units that was purchased at 55 Rand, we actually had, this was 32 that is left in closing stock. So of the of the 52, 32 is left in closing stock and 20 is sold. So that makes sense. Okay, so let's just finish this. 20 times 55 gives me a 1,100, right? Then there's one little thing that we need to remember, and that is that the transport cost amounts to 2 Rand per unit. So that needs to be part of trading stock and also part of my cost of sales if I'm going to sell any goods. But the information tells us that the opening balance already includes this 2 Rand, alright? So the 83 units already include the 2 Rand, but this 120, 98 and this 20, they don't include the 2 Rand. So we need to calculate the 2 Rand transport cost for those goods, which is going to be 120 plus 98 plus 28. So this 83 already included the transport costs, but these three didn't. Plus 20 times 2, and that is going to give you 120 plus 98 plus 20, 238 times 2, 476. And if you total all of this together, you're going to get your final answer for cost of sales, 5395 plus 8640 plus 6076 plus 1100 plus 476, and that is 21,687. Alright, so the next question asks us to calculate the total sales amount. Alright, so we already know what the units sold are. We know that we've sold 321 units. So to get to the total sales amount, we need to have the units multiplied by the selling price. Alright, we know we've sold 321 units. Let's see if we can find out some information about the selling price. We've already dealt with this. We've already dealt with the transport costs. We've already dealt with the 15 units that was damaged. The selling price of CDs is fixed at 100 Rand. Okay, so that's info about the selling price. But we also know this: 300 units from the opening balance was sold at 40% below the normal selling price. So my normal selling price is 100, but at this local charity event, they decided to sell some of the CDs for less. So 100 Rand minus 40% of the normal 100 Rand. So that's going to be 100 minus 0.4, 40% as a decimal is 0.4. If you see the word of, you can change that to multiply. 0.4 times 100, and that's going to be 100 minus 40. That's going to give you a selling price of 60. So we had a batch here of, have a look here, we had a batch here of 321 units, alright, and we know that most of them were sold at 100 Rand, but 300 units were sold at 60 Rand. So of all the 321 units, 300 of them were sold at 60 Rand, and the remainder, the 21, would be sold at 100 Rand. And that's how we're going to calculate our sales value. We're going to say 300 units were sold at 60 Rand plus 21 units were sold at 100 Rand. That's going to give us our final answer of 20,100. That's my selling price. Then the next question asks us to calculate the gross profit, which is very easy. How do we calculate gross profit? It's sales minus cost of sales. And we already have both those figures. Here we've got our sales figure, and here we've got our cost of sales figure. So sales is 2,100, cost of sales is, and even if you get this wrong, make sure you use the correct logic. Okay, so even if you have the wrong amount, if you use the correct logic, you will get the mark through marks. So 21,687. And that's actually going to give us a negative gross profit, which is very strange and which might make you think that you did something wrong. But in this case, it is actually correct. And we're going to indicate the negative by putting that in brackets. Happiness. Okay, that was question 1. 35 marks. And the trick that you had to know here was all about the first in, first out. That the first batches that come in will be the first ones that are sold. Okay, and so our cost of sales will be made up of the first batches that were sold, and our closing stock will be made up of the last batches because they will not yet be sold. Excellent.